Stop scrolling right now. Put your phone on airplane mode. Tell your wife you'll take out the trash later. Tell your kids the Wi-Fi is broken. Tell your boss you're in a meeting. Lock the door. Turn off every notification. Because what I'm about to tell you in the next 30 minutes is going to change your financial future forever. And if you miss this, if you get distracted, if you walk away thinking you can come back and watch this later, you are going to regret it for the rest of your life. Are we clear? Good. Ladies and gentlemen, the American guy here. It is Monday, January 20th, 2026, and I need you to understand something. While you were celebrating the weekend, while you were watching football, while you were arguing with your relatives about politics, the United States government just set a timer, a countdown clock, on 180 days. That is all we have left before the silver market detonates in the most violent price explosion in modern history. You're probably looking at your screen right now. You're seeing silver at around $93, maybe $94. You're thinking, yeah, it's had a nice run. It went from $30 to $90. That's pretty good. Maybe I should wait for a pullback. You are catastrophically wrong. You are looking at the match that's already been lit, and you're debating whether the fuse is burning fast enough. The fuse is gone. The bomb is about to go off. Let me tell you what happened last week. Because if you don't understand what happened between Tuesday and Friday, you will not understand why the next 6 months are going to be the most important 6 months in the history of the precious metals market. On Tuesday, January 13th, silver was trading around $91. The market was calm. Everyone was waiting to see what would happen with Trump's tariff announcements. And then on Wednesday, the news broke. Trump threatened to impose tariffs on 8 European nations over the Greenland situation. Geopolitical chaos, safe haven buying, silver ripped. By Monday, January 19th, silver hit 94.24, a new all-time record high, up 4.78% in a single session, up 208% from where it was 1 year ago. Think about that. 1 year ago, silver was $30. Today, it's $94. That is a triple in 12 months. But here's the thing. The triple is nothing compared to what's coming. Because on Thursday, January 15th, Trump made an announcement that most people thought was bearish. He said, I'm holding off on tariffs for critical minerals. We're going to pursue bilateral agreements instead. We have 180 days to negotiate. And what happened to the price? It crashed. Silver dropped over 4% to below 88.7 on Friday. The paper traders panicked. The weak hands sold. The Reddit crowd started posting, rug pull, it's over. The rally is dead. But they are wrong. They are so spectacularly wrong that it's almost painful to watch. Because here's what actually happened. Trump didn't cancel the tariffs. He delayed them. He gave the market a 180-day deadline. And then he did something that nobody's talking about. He ordered the Commerce Secretary to negotiate price floors for critical minerals. Price floors. Do you understand what that means? It means the United States government is about to set a minimum price for silver imports. They are going to artificially prop up the price to protect domestic producers. This is not bearish. This is the most bullish thing that could possibly happen. The government just admitted that they are willing to manipulate the silver market to keep prices high. They are abandoning the free market. They are intervening. And when the government intervenes in a commodity market, the price doesn't go down. It goes vertical. But let me explain why this 180-day timeline is the death clock for everyone who doesn't own physical silver yet. Let me explain why June 2026 is the date that changes everything. Because once you see the math, once you understand the timeline, you will realize that we are not in a bull market anymore. We are in the countdown to market failure. Let's talk about what happens over the next 180 days. Let's walk through the calendar step by step, and I want you to pay very close attention because by the time we get to June, the physical silver market will be completely destroyed. There will be no more coins, there will be no more bars, there will be nothing left to buy at any price. Here's the setup. Trump just gave the world 180 days to negotiate bilateral trade agreements for critical minerals. That means until mid-July 2026, there are no tariffs on silver imports. The borders are open. The flow of metal is unrestricted. This sounds like good news, right? Wrong. What do you think every industrial user in America is doing right now? What do you think Apple is doing? What do you think Tesla is doing? What do you think the solar manufacturers are doing? They are panic buying. They are front-running the tariff deadline. They know that in 180 days, the cost of importing silver could skyrocket. So they are buying everything they can get their hands on right now while it's still cheap. This is the paradox. The tariff delay is actually creating a massive demand surge. It's creating a run on the vaults because everyone with a brain knows that the price is going to be much higher in 6 months. So they are buying now. They are locking in supply now. They are securing their inventory now before the window closes. And this is happening at the exact same time that the physical supply is collapsing. Let me give you the numbers. According to the latest data, global silver production is flat It's been flat for years. The mines are tapped out. The grades are falling. There are no new major discoveries. We are producing roughly 1 billion ounces per year, and we are consuming 1.2 billion ounces per year. That is a deficit of 200 million ounces annually. Now, in a normal year, that deficit gets filled by recycling and by drawing down inventories. But this is not a normal year. Recycling is down because people are hoarding, and the inventories are being drained at a record pace. The COMEX vaults, the London vaults, the Shanghai vaults, all of them are bleeding metal. The registered inventory on the COMEX, the only silver that actually matters for futures delivery, is down to roughly 120 million ounces, and it's falling fast. So let's do the math. If we have 120 million ounces left in the COMEX vaults, and we have a deficit of 200 million ounces per year, how long do we have before the vaults hit zero? Let me break it out month by month. January, industrial users front-run the tariff deadline. Let's say 30 million ounces leave the vault. We're down to 90 million. February, the panic intensifies. News spreads that supply is tight. Another 30 million ounces gone. We're down to 60 million. March, this is a primary delivery month for futures contracts. Historically, March is huge. If the holders of March contracts stand for delivery, and they will because the Shanghai premium is still elevated, they could demand 50 million ounces or more. We're down to 10 million. April, the vault is effectively empty. There's only 10 million ounces left, and most of that belongs to clients who refuse to sell. The COMEX cannot fulfill delivery requests. They declare force majeure. Game over. This is the timeline. This is the death clock. We have less than 90 days before the COMEX runs out of silver. And when the COMEX runs out, the paper market collapses. The futures contracts become worthless. The ETFs get liquidated. And the only thing that matters is physical metal in your hand. But here's the really scary part. Most people don't even know this is happening. The mainstream media is not covering it. CNBC is not talking about the COMEX inventories. Bloomberg is not talking about the 180-day tariff deadline. They are too busy covering the stock market, covering crypto, covering whatever distraction keeps you from seeing the truth. And while the masses are distracted, the smart money is accumulating, the billionaires are buying, the institutions are buying, the sovereign wealth funds are buying. And you, the retail investor, you're sitting there waiting for a pullback that is never going to come. Let me tell you what happened on Friday. The price crashed from $90 to $88 after Trump's tariff announcement, and everyone thought it was over. Everyone thought the rally was dead. But by Monday, the price was back at $94. It recovered the entire loss in 3 days. Why? Because the physical buyers stepped in. They saw the dip as a gift. They bought everything. And now the price is right back where it started. This is the new reality. Every dip gets bought instantly. Every pullback is a buying opportunity for the whales. There are no corrections anymore. There are only consolidations before the next leg up. And if you're waiting for silver to go back to $70 or $80, you're going to be waiting forever, because those prices are gone. They're in the rearview mirror. They're never coming back. Now let me tell you about the price floor, because this is the part that nobody understands. Trump didn't just delay the tariffs. He ordered the Commerce Secretary to negotiate price floors for critical minerals. A price floor is a minimum price that the government will support. It's a guarantee that the price will not fall below a certain level. Why would they do this? Because domestic silver miners in the United States are struggling. They can't compete with cheap imports from Mexico and Peru. So Trump is trying to protect them by setting a minimum price. Let's say they set the floor at $100 per ounce. That means if the market price drops below $100, the government will intervene. They will buy silver to support the price. They will subsidize domestic producers. They will do whatever it takes to keep the price above $100. Do you see the trap? The government is telling you that they will not let silver fall below a certain price. They are removing the downside risk. They are guaranteeing a floor. And once the market realizes this, once the traders figure out that there's a safety net, they are going to pile in. They are going to buy with leverage. They are going to go all in, because the risk reward is completely skewed to the upside. If the government sets a floor at $100 and the current price is $94, you have 6% downside and unlimited upside. That is the best trade setup in the history of financial markets. And the smart money knows this. That's why they are buying now. That's why they are accumulating before the floor is officially announced. But the price floor is just the beginning, because once the 180-day deadline expires, once we hit mid-July, the tariffs kick in. And if the bilateral negotiations fail, if Trump doesn't get the deals he wants, he's going to impose tariffs on silver imports. Now, let's say it's a 25% tariff. If silver is $100 per ounce and you add a 25% tariff, the landed cost in the United States becomes $125. That's the new price floor for imported silver. And what happens to the domestic price? It has to rise to match the import price. Otherwise, everyone would just buy imported silver and arbitrage the difference. So the domestic price goes to $125. And once it hits $125, the industrial users panic. They realize they can't get cheap silver anymore. So they start bidding up the price. They start competing for the limited domestic supply. And the price goes to $150, then $175, then $200. This is the tariff trap. Trump has set a timer, 180 days. And when that timer runs out, the price of silver in the United States is going to explode. There's no way around it. The math is the math. The supply is the supply. And the demand is only going to accelerate. Now let me tell you who knows this. Let me tell you who is positioning for this right now. Because if you understand who the buyers are, you will understand why the price is never going back down. Let's talk about the players. Let's talk about who is actually buying silver right now and why their actions tell you everything you need to know about where the price is going. First, let's talk about Bank of America. On January 10th, Bank of America released a research report that sent shockwaves through the precious metals community. They put out a price forecast for silver, and the range they gave was absolutely insane. They said silver could top out between $135 and $309 per ounce. Let me say that again. Bank of America, one of the largest banks in the world, is publicly stating that silver could go to $309. Now, you might be thinking, okay, but that's just a forecast. Banks make crazy forecasts all the time. True. But here's the thing. Bank of America doesn't make these kinds of forecasts unless they are positioning for them. They don't put their reputation on the line with a $309 call unless they believe it is possible, and more importantly, unless they are already positioned to profit from it. Think about it. If you're Bank of America and you think silver is going to $300, what do? You buy silver. You accumulate as much as you can. You build a massive long position. And then you publish a bullish research report to get everyone else to buy and push the price higher. This is how the game works. The bank's position first, then they pump the narrative. So if Bank of America is saying $135 to $309, you can bet they already own a ton of silver. And you can bet they are not going to let the price crash. They are going to defend their position. They are going to buy every dip. They are going to push the price to their target. But Bank of America is not the only whale in the water. Let's talk about JPMorgan. For years, JPMorgan was the villain in the silver market. They were the biggest short. They manipulated the price down. They got fined hundreds of millions of dollars for spoofing. But something changed in 2025. JPMorgan flipped. They covered their short positions. And now they are long. They own physical silver, hundreds of millions of ounces. How do we know this? Because of the delivery data. Every month, the COMEX releases a report showing who is issuing delivery notices and who is stopping them. Issuing means selling, stopping means buying. And for the past 6 months, JPMorgan has been the biggest stopper. They have been buying everything. They are vacuuming up every ounce that hits the market. In January alone, which is supposed to be a quiet month, JPMorgan stopped over 340 contracts in a single day. That's 1.7 million ounces in one day. And they are doing this every single day. They are relentless. They are building the biggest long position in silver that the world has ever seen. Why? Because they know what's coming. They know about the 180-day deadline. They know about the supply shortage. They know about the force majeure risk. And they are front-running the collapse. They want to own as much physical silver as possible before the music stops. And it's not just the banks. The sovereign wealth funds are buying. The billionaires are buying. Ray Dalio has been talking about the end of the dollar reserve system. He's been saying that investors need to own hard assets, gold and silver. Stanley Druckenmiller, one of the greatest investors of all time, has been buying gold. And where gold goes, silver follows. But here's the most important buyer, the one that nobody is talking about. The United States government. Last year, the government added silver to the critical minerals list. They officially acknowledged that silver is essential for national security. And now they are preparing to replenish the strategic stockpile. There are reports that the Department of Defense is planning a multi-billion-dollar acquisition program for critical minerals. And silver is at the top of the list. Why? Because without silver, their missiles don't fly. Without silver, their satellites don't work. Without silver, the entire green energy transition collapses. So the government is entering the market. And when the government buys, they don't care about price. They have a mandate. They have unlimited funds. They will pay whatever it takes to get the metal. And if they are competing with Apple, with Tesla, with JPMorgan, with sovereign wealth funds, what do you think happens to the price? It goes vertical. This is the whale war. And you, the retail investor, you're caught in the middle. You're trying to buy a few coins, a few bars, and the giants are stomping around you, grabbing everything in sight. The question is, do you have your silver yet? Or are you going to wait until the whales have eaten everything and there's nothing left for you? Let me tell you what's happening on the retail side. because while the whales are feasting, the little guy is being locked out. And this is by design. Last week, APMEX, one of the largest online bullion dealers in the United States, and it's not just APMEX. Other dealers are following suit. They're raising minimums. They're extending shipping times. They're limiting quantities. Why? Because they don't have enough inventory. The mints are backed up. The refineries are running at full capacity, and the demand is overwhelming the supply. The United States Mint suspended sales of silver products last month. They literally ran out of silver. They couldn't produce enough coins to meet demand, so they stopped selling. When was the last time that happened? Never. This has never happened before. And the premiums are exploding. A year ago, you could buy a silver eagle for $3 or $4 over spot. Today, the premium is $10, $12, sometimes $15 over spot. That means if the spot price is 94 sir, you're paying $109 for a physical coin. That's a 15% premium. And it's only going to get worse. This is the retail lockout. The window is closing. The dealers are running out of metal. The minimums are going up. The premiums are skyrocketing. And if you don't act now, if you don't secure your position now, you might not get another chance. But let me address the people who are thinking, I'll just buy SLV. I'll just buy the ETF. It's easier. It's more liquid. Stop. Do not do that. Let me explain why paper silver is a death trap. Here's what most people don't understand about silver ETFs, like SLV. They think it's the same as owning physical silver. They think that when they buy shares of SLV, they own actual silver bars sitting in a vault somewhere. Wrong. You own a promise. You own a piece of paper that says you're entitled to silver, but you don't own the silver itself. Let me read you something from the SLV prospectus. This is the legal document that governs the fund. It says, and I quote, "The trustee's liability is limited to the trust's assets. SLV shareholders have no right to request physical delivery of silver." Did you catch that? You have no right to request physical delivery. You can't go to the vault and say, "Give me my silver." You're stuck with paper. But it gets worse. The prospectus also says that in the event of a force majeure, an unforeseeable circumstance that prevents the fund from operating normally, the trustee can liquidate the fund and settle in cash. That means if the silver market blows up, if the COMEX declares force majeure, if the vaults run dry, SLV can just shut down. They can sell all the silver, cut you a check, and close the doors, and you'll get cashed out at whatever the paper price is, not the real physical price. Imagine this scenario. It's April 2026. The COMEX has run out of silver. They declare force majeure. The paper price is frozen at $100, but the physical price, the price you actually have to pay to get a bar in your hand, is $200 or $250. SLV liquidates. They send you a check for $100 per share, but you can't buy physical silver with that money because it is trading at $250. You just lost half your money. This is not a hypothetical. This is a real risk, and it's a risk that the prospectus explicitly warns you about. But nobody reads the prospectus. Nobody understands the fine print. They just see the ticker symbol, they see the price, and they click buy. And they have no idea that they are holding a ticking time bomb. Now let's talk about the COMEX. Let's talk about the futures market, because this is where the real fraud is happening. The COMEX is supposed to be a market where you can buy a futures contract and take physical delivery of silver if you want. That's the whole point. It's a mechanism for price discovery and physical settlement. But here's the dirty secret. The COMEX has sold way more contracts than they have silver to deliver. They are running a fractional reserve system. For every ounce of physical silver in the vault, they have sold 10, 20, maybe 50 ounces worth of paper contracts. They're counting on the fact that most traders will close their positions before expiry. They're counting on the fact that most people don't actually want the metal. But what happens when everyone stands for delivery? What happens when the industrial users, the whales, the sovereign wealth funds all say, "We want the physical metal"? The COMEX can't deliver. They don't have it. So they declare force majeure. They say, "Sorry, we can't give you silver. Here's cash instead." And they settle the contracts at the paper price, which is a fraction of the real physical price. This is the scam. This is how they're going to rob you. You think you're protected because you own futures contracts. You think you're going to profit when the price goes up. But when the price really explodes, when the system breaks, they're going to change the rules. They're going to cash you out. And you're going to miss the real move. So if you're holding SLV, if you're holding futures contracts, if you're holding any form of paper silver, you need to get out. You need to convert that paper into physical metal while you still can. Because the window is closing. The dealers are running out of inventory. And once the force majeure is declared, once the system breaks, you will not be able to get physical silver at any price. Let me give you a historical example. In 1980, the Hunt brothers tried to corner the silver market. They bought massive amounts of physical silver in futures contracts, and the price went from $6 to $50 in a matter of months. But then the COMEX changed the rules. They went into liquidation-only mode. They said, you can only sell, you cannot buy. And the price crashed. The Hunt brothers lost billions. They were destroyed. Not because they were wrong about silver, but because the exchange changed the rules in the middle of the game. And the same thing is going to happen again. When the price gets too high, when the banks are facing catastrophic losses, the COMEX will change the rules. They will declare force majeure. They will settle in cash, and the paper holders will get screwed. But the people holding physical silver, they will be fine, because you can't change the rules on physical metal. You can't force majeure a bar sitting in your safe. You can't liquidate a coin in your hand. Physical is the only thing that's real. Everything else is a promise, and promises get broken when the system is under stress. So if you take one thing away from this video, let it be this. Own physical silver, not paper, not ETFs, not futures, physical metal in your possession. That is the only thing that will protect you when the system collapses. Now let me tell you what the end game looks like. Let me walk you through the exact sequence of events that is going to unfold over the next 6 months. Because once you see the timeline, once you understand the dominoes, you will realize that this is not a prediction. This is a mathematical certainty. Here's how this plays out. Here's the step-by-step breakdown of the next 6 months. And I want you to pay very close attention. Because each step builds on the last. Each domino knocks down the next. And by the time we get to the end, the silver market as we know it will cease to exist. Step 1. January to March 2026. The industrial panic buy. We are here right now. The 180-day tariff deadline has been announced. Industrial users know that time is running out. They need to secure supply before tariffs kick in. So they are buying aggressively. Tesla is buying. Apple is buying. Solar manufacturers are buying. They are all front-running the deadline. This creates a massive demand surge. And remember, the annual deficit is already 200 million ounces. But now you're adding panic buying on top of that. So instead of 200 million ounces of deficit, we might see 300 million or 400 million ounces of demand in the first quarter alone. The COMEX inventories drain. We start January with 120 million ounces in the registered category. By the end of March, we're down to 20 or 30 million. The vaults are nearly empty, and the market starts to realize that something is very wrong. Step 2, April 2026, the first default. April is typically a slow month for silver futures. But this year is different. The industrial users who couldn't get enough metal in January and February are desperate. They start standing for delivery in April. They demand physical silver, but the COMEX doesn't have it. The vaults are empty. The registered category has dropped to 10 million ounces or less. And there are delivery requests for 50 million ounces. The math doesn't work. The exchange cannot fulfill the contracts. So they declare force majeure. They announce that due to unforeseen supply disruptions, they cannot deliver physical silver. They will settle the contracts in cash at the last traded price. Let's say the paper price is $110 at the time of the announcement. The traders holding futures contracts get a check for $110 per ounce. But the physical market goes insane. The people who need silver for industrial use start calling dealers, refineries, miners directly. They offer $150, $175, $200 to get metal, and they still can't find any because everyone is hoarding. Everyone who has physical silver is refusing to sell. The price on the street diverges from the paper price. The COMEX says silver is $110, but you can't actually buy silver for $110. You have to pay $200. This is the moment when the paper market loses all credibility. Step 3, May 2026, the retail freeze. By May, the retail market is completely frozen. The online dealers have nothing left to sell. APMEX is out. JM Bullion is out. SD Bullion is out. The mints have waiting lists that are months long. The premiums are $50, $60, $75 over spot. The average person who wants to buy silver cannot get it. Even if they have $10,000 to spend, even if they meet the minimums, there's nothing to buy. The window is closed. The lockout is complete. And this is when the mainstream media starts to cover it. CNBC runs a story. Silver shortage hits retail market. Bloomberg writes an article. Why you can't buy silver coins anymore. The Wall Street Journal publishes an op-ed. The Great Silver Squeeze of 2026. But by the time the media is covering it, it's too late. The people who read those articles and think, oh, I should buy some silver, they can't. There's nothing left. Step 4, June, July 2026, the tariff bomb. We hit the 180-day deadline, mid-July 2026. The bilateral trade negotiations have been a disaster. Trump didn't get the deals he wanted. The Europeans didn't cooperate. China didn't cooperate. So Trump follows through on his threat. He imposes tariffs on critical mineral imports, 25% across the board. Overnight, the cost of importing silver to the United States goes up by 25%. If the global price is $120, the landed cost in the US becomes $150. The domestic price has to rise to match. Otherwise, all the silver would flow out of the country to wherever the price is higher. The industrial users panic. They realize that they can't afford to pay $150 or $175 or $200 for silver. But they have no choice. They need it. Their production lines will shut down without it. So they pay. And as they pay, the price keeps rising. $175, $200, $225. The government's price floor kicks in. Let us say they set it at $125. The government announces that they will buy unlimited quantities of domestically produced silver at $125 to support the mining industry. This removes any possibility of a price crash. The floor is in, the downside is capped, and the upside is unlimited. Step 5. August to September 2026. The bank failures. By late summer, the banks are in serious trouble. The commercial banks like Bank of America, Citi, HSBC, they were short silver for years. They sold futures contracts, derivatives, swaps, all betting that the price would stay low. But now the price is $200 or $225. And their losses are catastrophic. Let's say the banks were collectively short 1 billion ounces of silver through various derivatives. At $200 per ounce, that's $200 billion in losses. That is more than the market cap of most of these banks. They are insolvent. They are facing bankruptcy. The government steps in. The Federal Reserve announces a bailout. They can't let the banks fail. So they print money, they inject liquidity, they backstop the losses. But this causes the dollar to weaken. And as the dollar weakens, the price of silver in dollar terms goes even higher. $250, $275, $300. This is the death spiral. The higher the silver price goes, the bigger the bank losses. The bigger the bank losses, the more the Fed has to print. The more the Fed prints, the weaker the dollar. The weaker the dollar, the higher the silver price. It's a feedback loop, and it doesn't stop until something breaks. Step 6, October 2026 and beyond, the new monetary order. By the fall of 2026, the global financial system is in crisis. The dollar is losing its reserve status. Foreign central banks are dumping treasuries. They're buying gold at $5,000, $6,000, $7,000 per ounce. They're buying silver at $300, $350, $400. The United States is forced to back the dollar with hard assets. They announce a new monetary system. The dollar will be partially backed by gold and silver. They set a conversion rate. Let's say $400 per ounce of silver. This is the new official price. And if you own physical silver, if you held through the volatility, if you didn't panic sell when the price dipped from $93 to $88, you have just made a fortune. You bought silver at $30, $50, $70, and now it's worth $400. That's a 6x to 13x return. Life-changing wealth. But if you held paper, if you owned SLV or futures contracts, you got cashed out at $110 during the force majeure. You missed the entire move. You got robbed. This is the end game. This is the timeline. And we are currently in step 1. We are in the industrial panic buy phase. We have 5 more steps to go. And each step is going to be more chaotic than the last. So the question is, where do you want to be when this unfolds? Do you want to be the person holding physical silver, watching your wealth multiply? Or do you want to be the person scrambling to buy at $200, $300 to $400, only to find that there's nothing left to buy? The choice is yours, but the clock is ticking. 180 days. That's all we have. Now let me address the skeptics. Let me address the people who think I'm being too dramatic, too alarmist, too doom and gloom. Let me show you the evidence that this is not a theory. This is happening right now. Let's talk about the data. Let's talk about the hard evidence that proves everything I've been telling you is real. First, the price. Silver is up 208% in 1 year, from $30 to $94. That is not a normal move. That is not a typical bull market. That is a panic move. That is the market screaming that there is a shortage. Second, the Shanghai premium. For months, silver in Shanghai has been trading at a premium to New York. At one point, the spread was $13 per ounce. Shanghai was at $104, while New York was at $91. Why? Because China needs the metal. They can't get enough, so they're willing to pay more. This is called backwardation. It's when the spot price is higher than the futures price. It's when people want the metal now, not later, and backwardation is a massive red flag. It means the physical market is tight. It means there's a shortage. Third, the COMEX drain. The registered inventory on the COMEX has dropped from over 300 million ounces a few years ago to 120 million ounces today. That's a 60% decline, and it's accelerating. In January alone, a month that's supposed to be quiet, we saw 41 million ounces leave the vault. At that rate, the vaults will be empty by April. Fourth, the lease rates. When you borrow silver, you pay a fee called the lease rate. In a normal market, the lease rate is low, maybe 1% or 2%. But right now, lease rates are spiking. They're hitting 10%, 15%, even 20% in some markets. Why? Because there's no silver available to borrow. The vaults are empty. The lenders are charging desperate premiums because they know the metal is scarce. Fifth, the retail premiums. A year ago, you could buy a silver eagle for $3 over spot. Today, the premium is $12, $10, sometimes $18 over spot. That's a 400% increase in premiums. That tells you that the physical market is desperate. The demand is overwhelming the supply. Sixth, the U.S. Mint suspension. The United States Mint, the official producer of American silver eagles, suspended sales last month. They ran out of silver. They couldn't keep up with demand. When has that ever happened? Never. This is unprecedented. Seventh, the dealer minimums. APMEX just raised their minimum order to $10,000. Other dealers are following. They're rationing. They're prioritizing large buyers. This is what happens when supply is scarce. The little guy gets locked out. Eighth, Bank of America's forecast. A major Wall Street bank just went on record saying silver could hit 135 to 309. They don't make forecasts like that unless they believe it. And they don't believe it unless they're seeing the same data we're seeing. Ninth, the government intervention. Trump just announced a 180-day timeline for tariff negotiations and ordered the Commerce Secretary to set price floors for critical minerals. The government is acknowledging that the market is broken. They are preparing to intervene. And when the government intervenes, prices don't go down. 10th, the jpmorgan buying. The delivery data shows that jpmorgan has been the biggest buyer of physical silver for months. They are stopping hundreds of contracts every week. They are vacuuming up the metal. Why? Because they know what's coming. This is not a theory. This is not speculation. This is data. This is evidence. This is proof that the silver market is in crisis. And if you ignore this evidence, if you dismiss it as hype or fear-mongering, you're going to regret it. Because the people who are buying right now, the whales, the banks, the institutions, they are not stupid. They are not gambling. They are positioning for the biggest trade of the century. And if you're not positioned with them, you're going to be left behind. Now let me tell you what you should do. Let me give you the action plan. Because knowing what's coming is useless if you don't act on it. Here's what you need to do. And I want you to take this seriously. Because this is not financial advice. I'm not a financial advisor, but I am a guy who has been studying this market for years. And I'm telling you, from one human being to another, that if you do not act now, you will regret it. Step 1, buy physical silver immediately. Not paper, not ETFs, not futures. Physical metal. Coins, bars, rounds, whatever you can get your hands on. And buy from a reputable dealer. APMEX, JM Bullion, SD Bullion, your local coin shop. Don't wait for a dip. Don't wait for the perfect price. Buy now. Today. This week. Step 2, pay the premium. Yes, the premiums are high. Yes, you're paying $15 or $18 over spot. I know, it sucks. But the premium today is the cost of admission to the lifeboat. Next month, the premium might be $30. In April, when the force majeure hits, there might not be any silver available at any premium. So pay the premium. Stop complaining. Stop waiting for a better deal. The better deal was 6 months ago when silver was $30. That ship has sailed. The new reality is $94 plus premium. Accept it and move on. Step 3, secure your silver. Once you buy it, you need to store it safely. Don't leave it sitting in a vault at the dealer. Don't trust a third party to hold it for you. Take possession, put it in a safe, bury it in your backyard. I don't care. Just make sure you control it. Because if you don't hold it, you don't own it. Step 4, hold through the volatility. The price is going to swing wildly over the next 6 months. There will be days when it drops 5s or 10. The weak hands will panic and sell. The paper traders will get shaken out. But you need to hold. You need to ignore the noise. You need to focus on the fundamentals. The 180-day timeline is real. The supply shortage is real. The industrial panic is real. The force majeure is coming. And when it does, the people who held through the volatility are going to be the ones who win. Step 5, consider the miners. If you want leverage, if you want to multiply your returns, consider buying silver mining stocks. Companies like First Majestic, Pan American Silver, Hecla Mining. These stocks will move 3x to 5x what silver does. If silver goes from $94 to $300, the miners could go up 10x or more. But here's the catch. You need to own physical first. The miners are a speculation, they're a leverage play, but physical silver is the foundation. It's the insurance policy, it's the wealth preservation, so own physical first, then add miners if you want more upside. Step 6, educate yourself. Don't just take my word for it. Do your own research. Read the COMEX delivery reports. Track the Shanghai premiums. Follow the lease rates. Watch the inventory data. The more you understand, the more confident you'll be. And confidence is what you need to hold through the chaos. Step 7, ignore the mainstream media. CNBC is not going to tell you the truth. Bloomberg is not going to sound the alarm. They're controlled by the same banks that are short silver. They have every incentive to downplay the crisis, to tell you everything is fine, to convince you to sell. So ignore them. Turn off the TV, close the Bloomberg app, and trust your own research. Trust the data, trust the fundamentals. Step 8, be prepared for the end game. When the force majeure hits, when the system breaks, things are going to get chaotic. The banks might freeze accounts. The dealers might stop selling. The government might impose capital controls. I'm not saying this will happen, but it could. And you need to be prepared. Have cash on hand. Have food and water. Have a plan. Because if the monetary system collapses, if the dollar loses its reserve status, silver is going to be the currency of last resort. And the people who have it are going to be the ones who survive. This is not doom and gloom. This is reality. This is what happens when a fiat currency system reaches the end of its life cycle. And we are watching it happen in real time. So don't panic. Don't be afraid. But do be prepared. Own physical silver, hold it tight, and wait for the inevitable moment when the paper market collapses and the physical price takes over. Now, let me wrap this up. Let me give you the final takeaway. Because I know this has been a lot of information. I know your head is probably spinning. But I need you to understand the core message. Here's the bottom line. We are living through the most important moment in the history of the silver market. The 180-day tariff deadline has created a ticking time bomb. The industrial users are panic buying. The COMEX vaults are draining. The retail market is freezing. The banks are positioning. The government is intervening. And the price is about to explode. You have a choice. You can act now, while there's still time, while there's still silver available, while the price is still only $94. Or you can wait. You can tell yourself that you'll buy when it dips. You can convince yourself that this is all hype. You can ignore the evidence and hope for the best. But if you wait, if you hesitate, if you miss this window, you're going to regret it for the rest of your life. Because by April, the force majeure will have been declared. By May, the retail market will be sold out. By June, the tariffs will kick in. And by the end of the year, silver will be trading at $200, $300, maybe more. And you will be standing on the sidelines with nothing, watching other people get rich. This is not a drill. This is not a practice run. This is the real thing. The end game is here. The countdown has started. 180 days. That's all we have. Trump set the timer. The industrial users lit the fuse. The banks are positioning. The whales are accumulating. And the little guy, the retail investor, is being locked out. But you still have a chance. You can still get in. You can still buy physical silver. You can still position yourself for the greatest wealth transfer in modern history. But you have to act now. Today, this week, don't wait for permission. Don't wait for confirmation. Don't wait for the mainstream media to tell you it's okay. Because by the time they tell you, it will be too late. The price on Friday dropped from $93 to $88, and everyone panicked. But by Monday, it was back at $94. The dip lasted 3 days. 3 days. And if you missed that dip, you missed your last chance to buy below $90, because it's never going back there. Every dip from here on out is going to be smaller and shorter. The whales are buying every pullback. JPMorgan is vacuuming up the metal. Bank of America is positioned for $135 to $309. The government is setting price floors, and the 180-day clock is ticking. So here's what I want you to do. I want you to close this video. I want you to open a new tab, and I want you to go to a dealer's website, APMEX, JM Bullion, SD Bullion, whoever. And I want you to buy silver right now. Don't think about it. Don't overthink it. Just do it. Buy whatever you can afford. $500, $1,000, $5,000, $10,000. Whatever it is, buy it. Because that purchase, that decision is going to be the best financial decision you ever make. And when silver is trading at $200 or $300 in 6 months, when the force majeure has been declared, when the retail market is sold out, when the mainstream media is finally covering the story, you're going to look back at this moment. You're going to remember this video. And you're going to be so grateful that you acted, or you're going to be filled with regret. The choice is yours. This is The American Guy. It's Monday, January 20th, 2026. Silver just hit 94.24, a new all-time record high. Trump set a 180-day tariff deadline. Bank of America is forecasting $135 to $309. JPMorgan is buying everything. The COMEX vaults are draining, the retail market is freezing, and the countdown to market failure has begun. The whales are positioned, the banks are positioned, the government is positioned. Are you? 180 days. That's all we have. The timer is running, the fuse is burning, and the bomb is about to go off. Don't say I didn't warn you. Remember to like, subscribe, and share this video. Tell your friends. Tell your family. Tell anyone who will listen, because this information could change their life. The tariff trap has been set, the end game is here, and the window is closing. Hold the line. Buy the metal, and prepare for the greatest wealth transfer in history. This is the American Guy, signing off. God bless, and may silver be with you.